All right. You keep hearing about two things, RRSP and the TFSA. What are these things? The RRSP stands for Registered Retirement Savings Plan, and the TFSA stands for a tax-free savings account. And here's how they work. The RRSP is a container. You put money into this container, and from there you decide to invest in certain qualified investment. Now there's a max. Think of it like a bucket. There's a maximum that can go into this before you've reached the top. RSP has limits. For every dollar you put into your RSP container, your bucket, you'll see a reduction in what you're reporting on your taxable income that year. So if you made $100,000 and you contributed $10,000 into your RSP bucket, well, the CRA looks at it and says, well, you've made $90,000 and we'll charge you income tax accordingly. As this money is sitting in your RSP, you theoretically are investing it in something that's going to grow the value. So the $10,000 you put in there, it's going to increase in value over the years. It's not a tax avoidance plan, it's a tax deferral plan. So what's going to happen eventually when you want to put your hand into that bucket and pull out the money, by doing that, you're going to add income to your taxable income in the year you take it out. So let's go in the future, 20 years later, you decided to access the 10,000, which is now, hopefully it's 30,000, 40,000. You can now access that money, but you're going to be paying tax on a $40,000 of income in that year if you pulled it out in that scenario. On the other side, you got this thing called the TFSA, the tax-free savings account, and putting money into this bucket, well, it's got a limit as well before it spills over. But putting money in here, whatever you invest that money into, it's going to grow and it won't be taxable. The reason why it isn't taxable is because the money you're putting in there, you've already paid tax on the money that you've gotten putting it in there. There's no more deduction for that like the RSP has. So you either avoid paying tax now and you pay it later, or you pay it now and avoid it later. Those are your two options. Now, if you have money, where should you go? And the more and more I look online and listen to people like me on the internet talking about what to do, everyone seems to say, of course you should fund your RRSP. Of course you should go in this account. I don't agree. I don't agree. If you think like I do that tax rates are going to go higher over the years, not lower, well then you're just deferring your money, you're deferring your tax liability into the future where there will be higher tax rates. So I believe that that's going to be the case. And so I'm not a big fan of deferring the dollars to take it out at higher taxes in the future. So for me, I would put money in the TFSA, max that bad boy up, and let that thing make money for me. I'll take the proceeds tax-free when it's done. Don't take my word for it. Of course, you got to consult a professional and we can have an introductory meeting where you will meet some professionals in my network who will give you some accurate advice for yourself. But broad strokes, that's kind of how the RSP and TFSA work. And my take on which of the two, if I was going to pick one, where would I go with my money?